Hey there, Kim here. In today's video, we're going to be talking a lot about the $10,200 tax break that people that were collecting unemployment for the year 2020. So we're going to be diving in because I ran across this article and I was kind of floored, actually. We're going to talk about whether you should file an amendment if you already filed your 2020 taxes or not. And the reason why I'm doing this video is because I don't want you to be in a position where you could have received a higher income because let's face it, the tax break on the $10,200 could affect your return in other ways. And I'll obviously go in more detail, and I will of course link this resource that we will be going over below. I am not a tax accountant. I'm not a tax anyone, certainly not a CPA. So I will be going through this article almost word by word just to make sure that I don't screw anything up and tell you something that's not correct. But yeah, so, initially, if we filed our 2020 taxes prior to the bill being signed, then the IRS is saying, hey, you don't have to file an amendment. We'll take care of it for you. But then, as it turns out, just like I alluded to, you could in fact be eligible to receive a higher refund because once you waive the $10,200 or take away the $10,200 tax break, like I said, you could be eligible for other things. Therefore, you could receive a higher income. So I'm just going to stop talking and let's get into the article. Okay, so first let's go over the key points. Some taxpayers who collected unemployment benefits in the year 2020 and filed their returns in the early days of the tax season, in other words, prior to the bill being signed, they may have to file an amendment return to get the maximum refund. So the IRS will definitely give you a refund, if you're owed one, of course, of the $10,200, but there might be more things that you could qualify for. That would be the case if the new tax bracket on up to $10,200 of unemployment benefits makes them newly eligible for income-dependent tax credits and deductions like the Earned Income Tax Credit. Okay, President Biden, as we know, signed the American Rescue Plan about a month into tax season. Okay, so let's get into the nitty-gritty of the article. So the IRS is automatically recalculating and refunding money to Americans who filed their taxes without claiming the new tax break on unemployment benefits. However, taxpayers will have to file an amendment tax return in some cases to get their maximum refund. That situation applies to people, thanks to the unemployment tax break, that become newly eligible for other federal tax credit and deductions that weren't claimed on their initial tax return. Now, this is according to the IRS. And the article does go on to say such individuals may want to review their state returns as well. And this is obviously a given, right? Because some states are waiving the $10,200, some states aren't. I actually uploaded a video that I will actually put in the description below this video, a video that you can watch to see if your state is waiving unemployment taxes. Maybe they're only waiving partial. Anyway, did a whole video on that. I break down every single state. So definitely check that out. Again, it's in the description below this video. So it says the tax break may make some households eligible for tax breaks that they hadn't qualified for based on their income when they originally filed their taxes. That's because the tax break technically excludes benefits from a taxpayer's income, thereby reducing the income on which they pay tax. The income reduction may make them eligible for income-dependent tax breaks, like the Earned Income Tax Credit. Filing an amendment return is not a requirement, but many people will be leaving money on the table or might be leaving money on the table. And you don't have to file an amendment immediately. You have 3 years to do so. And in case you are not aware, if you are due a refund and you already filed your taxes prior to the bill being signed, then you should expect a refund starting in May, but you may not actually receive it until summer. So the starting to make payments in May, however, it will continue through the summer. So people could then qualify for the earned income tax credit as well as the child and dependent care credit. So the earned income tax credit is a refundable tax credit available to taxpayers who receive certain types of income in 2020, like wages and self-employment income. Income eligibility amount vary based on the number of kids, and the maximum credit is $538 for taxpayers with no children, and a maximum of $6,660 for taxpayers with 3 or more qualifying children. So this is kind of like where I'm lost, to be honest with you. I wish I can say, if you're in this situation, you definitely want to do an amendment, or, if you're in this situation, you don't need to. Again, I'm certainly not a tax person by any means. But, the whole point of this video is hopefully just to bring the awareness out there and just to let you guys know that you might need to do an amendment. But the article goes on to say the IRS can automatically adjust returns for those taxpayers who initially claimed the earned income credit and may now be eligible for an increase in that credit amount and potentially a larger refund. And in other words, no amendment tax return would be necessary in this case. So yeah, a lot of interesting, confusing stuff here. But what I would do is definitely take a look at your tax return. Obviously, if you have a person that is physically doing your tax return, you could just ask them any questions. If you use a tax software, TaxAct, TurboTax, I would definitely take a look at your deductions and see if, or what you can also do. Let me think here. So obviously you don't want to do an amendment without knowing that you might need one, right? But what you could do, I guess, is if you do use a particular software, maybe start like a brand new claim or a brand new tax return. If it may not even let you, I don't know. And then just kind of simulate, with the tax benefit, not paying taxes on the $10,200. And, maybe you can simulate that situation and see if you would indeed receive a larger income on top of what you'd be receiving when you don't have to pay taxes on the $10,200. I don't know, that could be an idea. But anyway, just wanted to bring this article to your attention because I definitely don't want you leaving money on the table when there's money left to be had. So thank you for watching this video. And again, the resource will be in the description. And I'll see you in the next one.